Hello everyone and welcome to Fun with Fitzy. This is going to be the last video in Chapter 1 for review of Grade 11. And today we're going to be looking at financial statements. This is Chapter 1, Video 4. Financial statements. You should remember 3 of them from Grade 11. And you should also remember that after transactions are identified, recorded, and summarized, 4 financial statements are prepared from the summarized accounting data. And if you recall the steps in the accounting process as being identification, recording, communication, and analysis. Well, this is the communication step, making the financial statements. And the analysis is the next step, whereby you look at the financial statements and you calculate ratios, and you look at certain numbers and compare it to other financial statements to see if the company is in good stead. Okay, so let's look at income statement first. As we know, an income statement presents the revenues and expenses, and therefore net income or loss of a company for a specific period of time. This is important. It's going to be a month, a year, or a quarter, whereas a balance sheet does not do that. A statement of owner's equity summarizes the changes in owner's equity for a specific period of time. So after you prepare your income statement and you get your net income, you then can prepare the change in capital by adding that net income and with taking away the drawings and seeing what the new capital is for the period. In addition to the income statement and statement of owner's equity, 2 additional statements are prepared. And the balance sheet reports assets, liabilities, and owner's equity of a business at a specific date, so one point in time. Remember, the income statement and statement of owner's equity is for a period of time, whereas the balance sheet is for one day. And a cash flow statement, this is going to be new to us in grade 12 because we did not do this in grade 11. And the cash flow statement summarizes information concerning the cash coming and going. Because as you know, we use accrual accounting, which means that sometimes we provide a service on account and we didn't get the cash right on time, and therefore cash didn't come in, but our revenue did go up. So cash will be important to look at in terms of the cash inflows of the company and the cash outflows, because a company can be doing very well but not have any cash. So cash flow statements will be introduced in this year. And the notes to the financial statements can be found in annual reports. And in this course, you're going to be having to do an analysis of an annual report as your summative project. And in an annual report, you're going to see notes. And we're going to talk about those as we go through this course. But those are going to be a very important part of the financial statements. Let's look at the income statement first. As we talked about already, remember we said it's for a period of time. In this particular case, it's for the month ended September 30th. If you recall, we used SoftBite as the company in the last video, whereby we recorded the transaction. So this is what the net income would have been for that particular company, given that they just started. Okay, so if you recall, revenue minus expense equals net income. And you can see that here. Revenue, which in this particular case, they have one revenue account called service revenue, and expenses total $1950. And if you subtract revenue and take away that $95, you're going to get $2,750 as the net income. Now remember, in our financial statements, whenever we need to do some subtotaling, we move everything to the left, which in case we have a list of expenses here, so we move them one column over to the left, and we have a single row line here, and the total goes over to the right. Okay, remember that. So again, in summary, net income of $2,750 shows the income statement shown on the income statement is added to the beginning balance of the owner's capital in the statement of owner's equity. So let's take a peek at that. So here's our statement of owner's equity, and here's our net income. Now in grade 11, our statement of owner's equity was a little bit different. We had our beginning capital which was here, and we put it in the middle column. And then we added net income and subtracted drawings in the same column. It doesn't matter which way you do it. I'm happy either way. Okay, so let's take a closer look. So at the beginning, the owner invested $15,000. Our net income for the period was $27.50, and both of these increase owner's equity. So get your subtotal by a single ruled line, and then those two together add up to this. The answer goes to the right. And then there was no beginning capital in this case because he had just started his business. So pretend that's zero, plus the $17,750 equals $17,750. Then the owner withdrew, so in the drawings account he took out $1,300, so $17,750 take away $1,300 equals, and your single ruled line indicating that you're doing a subtotal, equals $16,450. And don't forget your double ruled line and your dollar signs. Again, this is for a period of time. Okay, so now we have a new capital balance which we're going to need for our balance sheet. So here we have the balance sheet. Remember, we talked about the point in time as opposed to a period of time. This is a point in time. Okay, assets come first, and this is a very rudimentary balance sheet. We've been doing classified balance sheets now, but just as a reminder, we put dollar signs at the top of the row, single ruled line, double ruled line, and the total assets must equal the total liabilities and owner's equity when you add them together. So again, here's the $16,450 that we got from the statement of owner's equity. And you're going to see on the cash flow statement that $8,050 is reported here at the net increase in cash for the period. Okay, when we get into cash flow statement, it's going to be near the end of this course. We're going to see that we're going to look at cash flows from operating activities, and cash flows from investing activities, and cash flows from financing activities. These are the main three sections, but basically it talks about the cash that goes in and out of the company due to these three different activities that the company has. And the cash number will equal that cash number on the balance sheet as well. By now, you should know the 4 types of financial statements that we talked about. Prepare the first 3. That is the balance sheet, the income statement, and the statement of owner's equity. The cash flow statement we will learn in this course as we go. Okay, thank you for watching, and I hope this video helped.